Good evening, traders, and welcome to Price Action Trading School Time Factor. My name is Nenad, and we will review today important time factor. Time factor is actually very important when trading, especially because traders underestimate the power of time. The thing is that even again was writing about time and proper timing of your trades, and especially in today's market conditions, it has been very, very important. The main point when choosing a time when to trade and when to stay out of the market should be always important to you, because if you make an entry that is pretty much illogical when compared to time factor, it can definitely make it a wrong one. For example, today you might see that price has been ranging most of the time, and the chances that if you trade it today, you would probably be trapped in a range, and that will always happen before FOMC. And then usually when it happens, there is 50% of chance that your trade might go in your desired direction. And that is because time factor is one of the things that should be incorporated into your trading plan. So we will talk about this today. This will be very important for our trading, and especially for your price action trading school, because many traders, many analysts, and many forex educators will simply negate and skip this important part of trading. And we will not skip it. We will be actually using it in our both trading and price action trading school. So this is a very important lesson and very important part for all future price action traders, and not just price action, but also traders who want to succeed in forex market. Before we begin, standard risk disclaimer explaining all associated risk with forex market. By accepting this risk disclaimer, you're proceeding further with me. Admiral Markets UK Ltd will take no responsibility for the information accuracy. This is solely my opinion, and forex is risky business, so this should not be taken as advice. It's a personal opinion only, so this webinar is for informational and educational purposes. Download Admiral Market Supreme Edition by logging into your trader's room. You can also go at this address and check web trader platform. That will definitely be very helpful to your trading. Don't forget that Admiral Markets is officially best MT4 broker. So today's agenda will cover a time factor, best trading hours, and when to stay out. So time factor is, as I said, it's very important for making decisions. So let's say that you were trading today, and let's say that you probably saw my analysis of euro dollar, and you see that euro dollar is indeed rejecting from POC zone as planned. So everything goes according to our plan. But the main problem is what happens if we are stuck in a trade. So let's say that you were following today's analysis and that you had actually taken the entry that I presume today, and I analyzed it some time ago, also like 2-3 days ago. And I said strictly, I was very, very clear with this. I said that this is actually POC point and that we can see actually rejections. And we indeed are seeing rejections from this spot. But that's not the problem. The problem can happen if we are stuck in a trade. And what it means that, let's say that you have taken the entry and you are 5 pips in profit. And you probably ask yourself, what should I do? Should I close the trade? Should I actually take these 5 pips? Or should I risk and wait for FOMC to give me maybe 100 pips instead of 5 pips? Well, guys, the answer lies within yourself and your trading psychology. I would probably say, okay, if you have 5 pips and you know that, or 10 pips, it doesn't matter, and you know that FOMC is due in 1 hour and 45 minutes, my advice is always take the profits, because That is what really, this is very, very important lesson and important webinar, because time factor will decide about your profit or a loss. Okay, so if you know that, I'm sure that you know that FOMC will happen in 2 hours or an hour and 35-40 minutes, is it better to take 10 pips now or actually risk? Because when FOMC kicks in, movements will be huge, guys. Okay, and I mean literally huge. You can be spiked out in a single second. And what it means time factor. This is what no one has ever told you. No one has ever, usually people will say, don't trade before the news. It's not just before the news. Time factor is a bit more than news. Okay, so we only took today, and we mentioned only FOMC, but what about other things? Yeah, we will be mentioning also those things during this webinar. So at this point, I am focused on FOMC because that will be the major release today, and that will be the news, the release that will move the markets by a huge extent, guys. Okay, so don't underestimate the power of time factor. It should be incorporated into your trading plan. So as with your system, as with your risk, as with your money management, time factor should have an important part, a very important part of your trading, guys. Okay, so it's always better to close the trade when you notice something big is going to happen than it's actually leaving the trade going on. So it's very important for making decisions. If you don't do it, chances are that you're a bit of gambler, right? Because you don't want to take minus 10 or plus 10 pips. You actually want to risk, right? Think about this. And I know that at least once in your life you have experienced this, what I'm talking about now. Major sessions are also important, guys. You want to trade major sessions, okay? That is also a part of your time factor bullet point. Time factor is decisive. It's very, very important for your understanding of entries and exits. You want to make an entry during major session. You don't want to make entries during major session intervals. Now, major sessions are London, New York, and Tokyo. Remember that, guys. There are no other major sessions. Major session are major market opens. London, New York overlap, and Tokyo. No Australia, no New Zealand, no Frankie or Frankfurt. Those are not major sessions. Major sessions are, again, London, New York, of course, London and New York overlap, and Tokyo. Only those 3 sessions. Major session intervals happen during these major sessions. And those intervals are usually after 3 hours of major session. Okay? So the first 3 hours of each major session is when market is moving. Okay? After those 3 hours, there will be some breaks. And those breaks are usually for either profit taking or continuation. Now, imagine this, and you will know what I'm talking about. You are in a trade, and let's say that you have taken your trade during London Open and you are like 50 pips in profit. But it's like 4th hour of London, and what it might happen is major session interval. So it will be maybe a London lunch, right? London lunch break. That is also very important to understand. Usually around, let's say, 10 GMT, it's 11 GMT plus 1 London time, something will happen. Either a reversal, usually you will see that price is starting to reverse, or you might end up in a additional profit. Usually it's reversal. So probably that your trade has been stuck into a major session interval. If it's London lunch, chances that there will be a profit taking, and your trend trade, instead of 50 pips, will drop to 25 pips of profit. Usually you will notice it, right? I know that you have noticed it at least once or twice during your trading career, but I see it every day. What I tend to do is actually I profit stop my trade, because I don't know whether London lunch break will be enough to actually put me in a drawdown instead of profit, or give me additional spike to the upside. I usually do a profit stop. So I put a stop loss at 20, 30 pip depending on entry, and I simply I don't care anymore. So if you bump into a major session interval, the chance is that there will be it will be twofold. Either your trade will be reversed, so instead of taking some money, you will end up in a loss. Or if you are already in a loss, you might end up having a small profit because of that reversal that usually happens during major session interval, let's say London lunch. And usually it's due to profit taking. So what I suggest is protect your profits. Put your stop loss to break even, or simply said, just protect your trade however you see it fit. Okay? Whatever you see fit, try to protect your trade. That is very important part of your trading. Now again, guys, what can happen is actually end of day. Don't open trades during end of day. End of day is usually when London market closes, and let's say 2 hours after it. There will still be some movement, but you will end up in end of day trading, and your trades will go nowhere, guys. I know that they will go nowhere. That is the fact. And simply, if you do that, if you don't listen to my advice, there is a big chance that your trade will be stopped out when major session kicks in. I know that because it happened to me a lot of times, and I'm talking from my personal experience. So if you end up opening your trade at the end of day, so let's say in 2 hours, and let's say that there is no FOMC. So if there is no major news like major event like FOMC, there will be no movement, and you will be stuck in a range. So now is the time to actually take the profit or profit stop your trade. Because if we didn't have FOMC in 2 hours, simply said, there wouldn't be any movement, guys, and you will be stuck in your trade, and you will be waiting for major market open, and that is, well, after midnight, usually Tokyo, and that will give you some maybe profit or maybe a loss. So end of day trades are a no-no. Okay, we don't make end of day trades. This is the example of a good forex market converter. I use it. I will show you also on live chart. And also you have an Admiral Markets Supreme Edition. Okay, you have a session map. Okay, and that is very good because for new traders it's especially useful because it shows which session you're trading in. Ilya, let's say, saying he's in profit with euro dollar long 11.95. He is like 35, 40 pip in profit. What I would say is either take your profit, scale out, or put your trade to break even. That is important, guys. Okay, that is very important. So either take your profits completely, take the half of your profit and put the rest to break even, or put your trade to, let's say, plus 35 pip in profit and place your stop loss on 35 pip profit. That is what I would suggest. Because if you wait for a candle spike on FOMC, you don't know which way it will go. FOMC can go and can spike euro dollar up in a second, or it can spike it down just to be reversed after 2 or 3 minutes. So don't gamble, okay? Protect your trades, else you might end up in a profit. Don't be greedy. Guys, I know why you lose in trading. It's not simply because you don't have a system. It's because you are greedy. You want to take every possible chance of the market. You want to exploit the market to the fullest. Well, guys, if anyone before me had told you about time factor, you wouldn't have been doing this. Because you don't need to trade when trade is not to be taken. And that is why time factor is of utmost importance. So FOMC, you are in profit. If you want to gamble, leave your trade. But if you want to be professional, take the half of your trade, put a stop to put a rest to break even, or use a profit stop. Okay, I don't mind taking every single pip before the news, because market will give me another chance to trade, guys. It will be another day tomorrow, day after tomorrow. Why risk? Because you will maybe end up in a good profit today, but next time you will end up in a loss. And if you do that, you are developing a bad habit, and you don't want to do that. So this is what you should pay attention. If you don't know which market you are trading in, where you are, if you're confused with all these markets, if you're a new trader, this will be of a good help to you guys. Believe me, this is very good. I have used it. And simply said, guys, okay, simply said, we will move on to live chart, and I will show you. Okay, I will show you here. Okay, here, yeah. Forex market time converter. How do I determine my time zone? Well, my time zone is actually GMT plus 2. So this is what you do also. This is what you do. Determine your state, your city. Okay, so I'm Europe GMT plus 2. Okay, it doesn't matter. Everything is great. Belgrade, Zagreb, whatever. Everything is the same time zone. So let's see what is the same for me. It's the same. So here, guys, my time zone, my time is 6:20 now. Okay, it's actually GMT plus 2. And where you want to trade is actually, you see, London, New York overlap, but it's end of day, because you see London has closed now. And you probably saw some profit taking during this London close. You saw some yen pairs going down because of profit taking. And yeah, for, let's say, Australian dollar yen went up, and now last couple of hours it started to go down. That's because of profit taking. So you don't want to trade Australia. You want to trade during Tokyo session. Tokyo session will begin 1 a.m. my time. Okay, so this is where I can trade, and you can do it too. So you can pick your time zone. Let's say you are in London time zone, Europe London time zone is GMT plus 1. So this is the time in London now, and you see it's different time for them. Tokyo starts at 12 a.m. So guys, this is important. Really, this is very important for you to know. Okay. And also, what important thing is on Admiral markets, Unmirror Market Supreme Edition, you can actually see, you can actually, I will show you now. You can actually use session map here. Okay, this is my FX book. Let's see session map here. See session map. It shows where we are. Okay, so pay attention to it. It's very important. So best trading hours, guys. London, New York overlap first 3 hours of each session. So first 3 hours of London, New York, okay, and Tokyo session. Major sessions only. Don't forget it. Major sessions only. Okay? This is of utmost importance. So London first 3 hours, New York first 3 hours, London, New York overlap first 3 hours of each session. Major sessions. If you are stuck in a trade during this session because you have stumbled into a major session interval like London lunch or some form of profit taking or pre-news when market is actually ranging, it's always better to take profits than to make additional risks in the market. Believe me, guys, it's much better. When to stay out? During bank holidays, okay, guys, you don't want to take any trades during bank holidays because bank holidays are actually when no one is defending support and resistance levels, so you don't want to trade. Before the news, important news, or red news, how we call it, if it's let's say not so important news, you might actually dare to take a trade. So it needs to be actually not so important news and you will be able to take a trade. So bank holiday, no trade. Before major news like FOMC, unless you want to trade a spike, but then guys, you shouldn't have any big position unless you want to trade the new spike. So if you know that FOMC is coming, take out your profits or protect your profits. Because else you will be gambling, guys. You will be gambling. You don't know what might happen. Okay? Also, what is very important is speeches. You don't want to risk anything if there is a conference. FOMC will provide a statement, but very often there will be some speech after it. It's so-called news conference, where chief of central bank will they will provide various answers and insights for reporters, or there will be conference where they would answer some important questions about their own economy. So if you know that Fed Chief Yellen is speaking, you don't want to take any dollar trades. Actually, you might be out because equities will also move. So equities will move also forex market. So, but the thing is that you might be exposed to other pairs that are not so exposed to a speech. Let's say if you trade dollar, well, then it's up to you whether you will leave your positions. But it might actually be better to trade Australian dollar, New Zealand. Or if you know that ECB President Draghi is having a news conference, check the calendar and see if that news conference is indeed important. If it's not important, then you can leave your trade. If it's important, then it might affect euro pairs. But guys, that I say, that is usually when there is a speech coming in on where something important is going to happen. It won't do any, actually, it won't do any bad if you try to actually close your trade before an actual announcement. Or if you still want to trade, then you need to be sure that actually there won't be anything bad coming from the speech itself. So if it's a simple conference about the climate, or where, let's say, ECB president is a guest, he will talk about some events that are not so important for the economy, then you might be exposed actually. But if you know that there is ECB, FOMC, BOJ, RBA conference, then don't make any positional trades. If you're in a trade, you're stuck in a trade, then put a stop loss. But if you are in a profitable trade, take your position out. It might be good for you in the long run. Okay, in the long run. Also, during erratic periods, guys, you don't want to trade during erratic periods. Okay, there will be times where a currency is moving differently from normal. Perhaps it's spiking and you don't know why. Okay, if that happens, usually it's because there is some unscheduled news that has been released or leaked. Let's say, think about it, last couple of days where we saw a lot of GBP polls coming in, kicking out. And those polls actually made huge movement in the market. And that is the time where you actually want to stay out, not to trade. Well, at least GBP pairs, because euro pairs, dollar pairs were not so affected as GBP dollar, GBP yen. Okay. Also, think about weekend carryovers. It's unadvisable to hold trades over the weekend unless your method is a long-term strategy, which specifically involves holding trades for longer time frames, such as weeks or months. A lot can happen over the weekend. Okay, all it would take is for one bank to go bust over the weekend for your position to go completely different from how you expected. A terrorist attack could happen over the weekend, which would also move the markets crazy. Okay, but guys, this might seem out of the normal, but if you look these events, those happened recently, really recently, on more than a single occasion. So these types of events will generally lead to the market opening again with a large gap, and generally with a large change in your position. A lot of times this can cause serious harm to your trading account. Also, market close open. Good idea is to avoid market close or open, because if you make a position during a market close or market open, well, it can be a very bad position. Why? Because at market close, a number of trading positions are actually being closed. So this will lead to volatility in the currency markets and can cause the price to move erratically. The same applies at market open. A lot of people are opening positions as they do not want to hold them over the weekend for the reasons that we talked about. December or summer holidays, banks tend to trade the forex market at least once a day for balance sheet reasons, and can trade a number of times throughout the day for speculation reasons. Think about it also. It's very important. Think about it, guys. Lunchtime, okay, that is, let me say just, I mentioned balance sheet reasons. Okay, December summer balance sheet. When I say balance sheet, I mean to balance out their currency book. So they need a certain amount of each currency to meet the demand of their customers that are both personal and business, that will need to buy foreign currency from the bank or exchange their foreign currency for their local currency. Banks have to balance this out each day. Otherwise, they leave themselves open to foreign exchange risks. And this also makes banks major players in the forex market. And during December and summer, a lot of bank staff take their holidays. Therefore, forex market generally slow down because there are fewer participants in marketplace. And that is generally a good time for private traders, retail traders to take a holiday. If the markets are flat, there is no point in trading. Go enjoy the sun. You need to be in prime fighting conditions, and holidays are also part of giving your mind some relaxing time, and you need to incorporate it into your trading plan. Lunchtime, also very important, is lunchtime hour for each of the major markets, namely London, Tokyo, New York. When there is a lunchtime, you will see signs of market reversal, because professional traders who have the ability to influence the market need to square their positions so they can go out for lunch. Okay? What you do is close your trades around lunchtime, and or stay in a trade, placing a profit stop or making a stop loss definite. You don't move it. So lunchtime is the time. Usually it's London. It's not so obvious. It's not so important during New York or Tokyo, but London. Martin is saying market close opens 1 or 2 hour. Well, usually, market opens at, let's say, 1 hour before Tokyo session. So you simply said, Martin, you need to wait for a Tokyo session. Check your time zone and check when your Tokyo session starts. So when market opens, you wait for Tokyo session. Tokyo session is the session you want to trade. Okay? Market close, I mean, I already told you it's London close. So when London market closes, you can trade 2 more hours, usually making scalp swings. But don't make any position trades after 2 hours after London market close. Okay? So lunchtime reversals, okay? It can happen, as I say, some form of reversal that will look like a retracement. Okay? That is what you actually use for taking a simple trend trade after a reversal. If you see that your trade is starting to reverse, protect it. Then there will be another chance to go again into the trend direction. So close trades around lunchtime or put a protective stop. Switch to intraday positioning. So it means that if you are in profit, take your profit, let's say half of your profit, and make it an intraday trade. So simply put the rest to break even and wait. Profit taking can happen around daily range levels pre-news. So if you see that the price is stuck in a range and there is a London lunch time, if it's at the top of the range, chances that it will go down. If it's at the bottom of the range, chances that it will go up. And profit taking usually happens around daily range levels. Okay? It's also important to watch for New York Stock Exchange. The New York Stock Exchange is approximately at 13:30 p.m. GMT, 13:30 GMT. It's 1:30 p.m. GMT 13:30. Okay, remember the date. On my time zone is 15:30. And the thing is, usually Americans will buy equities and yen pairs will go up. There is a time when you can try for a breakout trade. So New York Stock Exchange, okay, it opens at this time and it's good for taking small scalps or breakout trades. Okay? Sometimes the market will be slow. If you see that market is very slow, it means that something is happening. Market is waiting for something. Don't forget Forex options, guys. Forex options expire between 9:30 10:30 a.m. Eastern time is 13 GMT, like New York Stock Exchange. And you will see some strong market movements because dealers are trying to move the market before the options expire. Be careful, as the dealers might push the market to a price point and exercise the options, and then price reverses. Okay? So you can also watch for options. Frankie Fake happens 1 hour prior to London session. So Frankie Fake tends to turn the price in a contra direction than it's a London. That is why we traders call it Frankie Fake. So the movement is usually fake. If the market goes down during Frankie Fake, it usually goes up on London Open. Okay? Also, guys, as I say, just watch that when equity market jitters. Equities will be moved by some events, and if you see that DEX is going up, you know that there might be an impending trade on euro dollar, or let's say AUD yen. Also, not each session is for each pair. You need to know what kind of movement to expect during each major trading session. For instance, most European currencies will move in a range during Asia session. And when you see the range identified, you can enter trades at top or the bottom of the range. The principle behind why these currency pairs move in a range is based on liquidity. When there isn't enough liquidity to move a currency pair, let's say such as euro dollar during Asia session, movements are confined in a range. So in euro dollar will not move a lot during Asia session. Pound yen pairs, Australian and New Zealand pairs will simply move better due to that liquidity. Also, pre-FOMC, pre-NFP, the price tends to be slow and usually stuck in a range. When that happens, you need to be very careful about thinking what I already said. Either taking your profits or protecting your profits. Okay? Think about it. Okay? And now we will move on to live chart and see what happened today. And that will be actually this webinar. So you can ask me if anything is not clear. Okay? Because next time, okay, we will have a ATR session, ATR webinar, how to apply ATR. I have my own indicator for ATR, and I will show you how to do it because you will also be using it in price action training school and later. And simply, if you don't understand anything, something that I've been speaking, or if you don't know about these things, be free to send me an email and I will of course respond. And yet again, let's see euro dollar today. I already told you it's very important to know which session you're trading in, and that market is waiting for FOMC. So see here, market is actually, we will go to 1 hour chart. See, this is the range today, not a big range, because market is expecting the news. And you will usually see this before any major news release. CODN, everything is usually very simple. Pound yen was great mover for today. Okay, on good news, pound spiked up, and then probably because market is waiting for FOMC, it started to reverse. So you see the price is very slow, and it wasn't the case for the last couple of days. See? So think about this. Again, I'm mentioning the time factor is very important. You should always know when to enter the market, when to protect your trade, and that is one of vital parts of trading. If you trade the first hour, 3 hours of each session, the chances are that you will end up in profit, but simply said, don't overtrade. If you know that if you know that your way of trading is successful, don't overtrade. Wait for another day, because there will be another opportunity. So this was all, guys. If you have any questions, don't hesitate to ask me. I hope that you enjoyed the webinar. It's very important for understanding of price flow. And simply said, there is no system that will tell you how to trade profitably if the system does not have a time factor included. So that is why I would never tell you to trade at noon. Let's say, why would you trade at 10, 11 GMT? Or let's say if market opens at 7 GMT, London, let's say it opens at 7 GMT, you would actually like to trade at and prefer to trade at 7, 8, and 9 GMT. So the first 3 hours of each session are profitable. Now, Ron is saying it might be too much for someone with 9 to 5 job. Well, Ron, that is why we use part-time trading strategies. Or Ron, if you have a 9 to 5 time job, try to scalp the market. Scalping will take 5 to 10 minutes. If I'm sure that you can find 10, 15 minutes during your day job to scalp the market. Okay? Before 9, well, you can scalp, because scalping is different, guys. This is what we've been talking about. It's usually for positional trades. Okay, so it doesn't apply to scalping. You can scalp pre-FOMC, you can scalp pre-NFP, you can scalp on each major session. You can scalp even before 9 a.m. during Frankie Fake. Because scalping is 10 pips only, right? What you need actually for scalping is movement. So if you see that market is moving, and market will be moving during Frankie Fake, during I don't know, Tokyo session, definitely you might scalp. So this webinar today, time factor, mostly applies to intraday positioning. For scalping, it's much easier. And yes, you can part-time trade with applying scalping option. Because if you have 15, 20 minutes available, try to scalp the market. Because on some day jobs, you are free to do whatever you want if you do your assignments. So if your boss tells you to do 5 different assignments and you do it, why would anyone object for you to take maybe a few scalping trades? That is, guys, what I did before I started to trade Forex market. I was hiding from my boss to actually trade the market. And it made me a successful trader and analyst because I was intensively doing the analysis, trying to understand every single bit of price. I do my assignment and I'm free to do whatever I want. And I used it for actually digging deeper and deeper in Forex market back in 10,006, 7. So long time ago. So you can also do it on your day job. Whatever you do, well, my day job back in 10, 11 years ago was still connected to economy, okay? But in a different way. But the main thing is, I know that I have, because I also have some friends who are working on other jobs, and they love to scalp market few pips here and there during their day jobs. So important thing is that you do your own assignments on your day job, and if you're free to, let's say, use a PC or computer or have some free time, I'm sure that you have some free time on your day job. Why not try to part-time scalp the market? It's okay, guys. Okay, so even now, guys, I'm fully into Forex market, doing analysis, doing webinars, doing now this Brexit thing. There are a lot of webinars that we will have about Brexit, Chris and I together, also Forex Street webinars. And I still manage to trade here and there. Let's say that last month I've been very, very busy, and I couldn't make myself to trade because I was very busy. But I still managed to actually scalp few pips here and there, guys. Even I've been working like 12 hours really per day. So many things to cover, so many people to help. And I managed to make 3 or 4 scalping trades during last month. So guys, simply said, there always will be time to take a trade. But you know which kind of trade, whether it's a scalping trade or intraday position or intra-week swing. This webinar time factor apply to intraday trading. And after we finish with price action trading school, we will have live trading webinars also, where I will be posting and teaching you how to apply all that to your trading template, price action. Okay, but we need to cover all of these factors before we go to a live trading webinars. Thank you again, guys, for listening. I will be here with you soon. Pay attention to FOMC and don't forget the time factor. Cheers, and as always, trade safe.